Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the corporate world one filing at a time. And today we're diving into Humacyte's latest report to see if they're building a better future or just selling dreams. Humacyte just announced a new deal that could bring in up to $60 million, but is this a lifeline or just more paper being shuffled? Let's find out. Alright, so what we have here is a Form 8K filing from Humacyte. Incorporated, this is essentially a report that companies send to the Securities and Exchange Commission when big important things happen that the public needs to know about. The key date here is the 16th of December 2025, marked as the earliest event reported. This is when the company announced it entered into a sales agreement. So they signed a sales agreement with TD Securities USA LLC, otherwise known as TD Cowen. This agreement is for selling up to $60 million worth of Humacyte's common stock. Now, Humacyte is a company that is working on regenerative medicine. They've developed something called Symvess, which is a product intended for tissue repair and regeneration. So they're in a pretty cutting edge field. Their common stock is traded on the NASDAQ stock market LLC under the ticker symbol HUMA. So when they say they're selling stock, they're talking about shares of this publicly traded company. That $60 million figure is the maximum amount they can raise through this agreement. It does not mean they are guaranteed to raise that much. And what are they going to do with the money? Well, the company says it plans to use the proceeds to fund the commercialization of Symvess, particularly for vascular trauma indications, which is a pretty specific medical need. They also mentioned developing other product candidates and for general working capital and corporate purposes. So it is a mix of growth and keeping the lights on. TD Cowen is acting as an agent in this deal. They will use their best efforts to sell these shares. It is important to note that Humacyte isn't obligated to sell any shares under this agreement, and TD Cowen might terminate the agreement under certain conditions, like if there is a material adverse effect on the company. The way these shares will be sold is called an at-the-market offering. This is common for companies that want to raise capital without trying to time the market with a big one-time sale. Instead, they can sell shares gradually over time as market conditions allow and as they need the cash. Humacyte will pay TD Cowen a commission for selling the shares. The commission is capped at 3.0% of the gross proceeds. This is a standard fee for this type of arrangement. Now, from a decoder's perspective, this filing tells us a few things. Humacyte is looking to shore up its finances to push its key product Symvess through commercialization. It is a smart move to have an at-the-market offering facility in place for flexibility, but it also signals that they need access to capital, which might mean they are not yet generating enough revenue from their own. To fully fund these ambitious goals, the company is essentially saying they believe in their product and their pipeline enough to use the public markets to fund it. This is a bet on their future growth and the success of Symvess in treating vascular trauma. The $60 million target is significant. It shows ambition, but also the potential need for substantial investment in bringing a new medical product to market. The success of this offer will depend on investor confidence in Humacyte's technology, and its ability to execute its commercialization strategy. Risks to consider are numerous in the biotech space: regulatory hurdles, clinical trial outcomes, competitor advancements, and market adoption all play a big role this 8. K is just one piece of the puzzle. Investors will need to look at their full financial statements and understand the competitive landscape for vascular trauma treatments to make a fully informed decision. Overall, Humacyte is making a strategic financial move to fund its growth and product development. It is a sign of a company actively managing its capital to achieve its long-term vision while raising money is generally a positive signal. It also highlights the ongoing need for capital in this high risk innovative industry. Alright, that is our breakdown of Humacyte's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching.